धरना आपने बेटा प्रोजेक्ट कंप्लीट कर ले यार, क्योंकि उसके बाद मेरे को बहुत ज़्यादा प्रेशर है काम का, फिर मैं गाइड नहीं कर पाऊंगा। जल्दी से जल्दी वो कर ले प्लीज। थियोरिटिकल तो तू खुद भी कर सकता है, मेन चीज एनालिसिस मुझे दिखा दे। एनालिसिस का इंटरप्रिटेशन जो है वो कैसे लिख रहा है, नहीं लिख रहा है, टेबल्स कैसे प्रेजेंट करना है, क्योंकि वो छोटे छोटे करेक्शंस हैं, वो फिर बाद में मैं बता नहीं पाऊंगा। ठीक है, कोड्स तो लिखे हुए हैं, वो कोड्स मैंने तुझे भेज भी चुका हूँ, इफ आई थिंक सो। हाँ, ग्राफ्स तो भेजा था, उसके साथ साथ आई थिंक तुम्हें कोड्स भी भेज दिया था मैंने, एक बार चेक करना। हाँ, तो उसे कुछ नहीं, उसे कॉपी करना, कॉपी करके जस्ट पेस्ट करना है उस कोड्स को, और कुछ नहीं करना है। ठीक है, इवन कोड्स भी शायद मेल के बॉडी में मैंने पेस्ट करके भेजा था, कुछ लाइन का कोड था, उसे आप एग्जीक्यूट कर लेना, एग्जीक्यूट करके फिर रन हो जाएगा वो आपको मशीन। तो आउटपुट्स सेव कर लेना पहले टेक्स्ट में, एंड उसके बाद फिर एक्सेल में कॉपी करना, क्योंकि फिर आराम से कॉपी हो जाता है। कंट्रोल आर, कंट्रोल एंटर, सॉरी, सब सिलेक्ट कर लेना एंड कंट्रोल एंटर। बट उसके साथ क्या, आपको डेटा को पहले लिंक करना पड़ेगा, डेटा अगर लिंक नहीं करोगे तो वो रन नहीं होगा कोड। मैंने बताया था ना, वो वहाँ पे इंपोर्ट से आपको करना पड़ेगा। चलो, अगर नहीं होता है तो मुझे एक बार बताना, मैं बता दूंगा। So we were in our previous session, we were discussing about the enterprise DCF model, right? Now, in that, I think we first discussed about the valuation of a firm and valuation of a project. I think we will start from this slide, right? If I'm not wrong. No, it is not IFM, it is CVA. Today's CVA class, corporate valuation and analysis. Last time Jana Small Finance Bank, उसमें गया, हाँ जाना हाँ, ये अभी सारे स्मॉल फाइनेंस बैंक बहुत सारे हुए हैं ना, जैसे AU हो या जाना स्मॉल फाइनेंस, तो ये काफी अच्छा कर रहे हैं ये लोग इनफैक्ट। So I think we'll be starting off from this slide, valuation of a firm versus valuation of a project. Correct. So what are the differences between valuation of a firm and valuation of a project? Can you tell me? The firm is a bigger entity. And project is a part of a firm's industry. Okay. It is a part of a business you can talk about. Second, what is that in case of a firm, it is infinity. The life of the firm is infinite, right? But project has a fixed deadline, has a limited time, right? Another is that say for example, after a project can have a salvage value also. But in case of the company, it doesn't have any salvage value. It is to either totally liquidated or it keeps on running. Great. Another very typical example is that whenever we try to project the value of the firm, we need to consider two very important things. One is present value of cash flow during an explicit forecast period. Now, what do you mean by this term explicit forecast period? No, explicit means what? Definite, something definite. Forecast, say forecast for the next 5 years, forecast for the next 3 quarters. It is an explicit forecast, right? So you need to determine that what is today's value. If you're projecting something that, okay, my company is growing by 5% or 6% annually. Now on that basis, you are forecasting that, okay, in the upcoming 5 years, this will be my sales or this will be my OPEX or CAPEX. These are the main ingredients of any income statement or balance sheet, right? So from these things, you are trying to forecast. And today you want to know that what is the value today. If my company is growing 5% and if my sales will be this after 5 years, so what is the value of the sales in today's costing or today's price? If I need to pay a fixed amount of cost of capital, correct? Tell him to come upstairs. And another important term is present value of cash flow after the explicit forecast period. That means one is pre-analysis, another is the post-analysis. So in any case, whether it be IPO, whether it be mergers and acquisitions, whether it be any sort of economic activity for the firm, one will be pre-activity analysis, another will be post-activity analysis. So, good morning, sir. So in valuation also, it is the same scenario. Okay, आपका ये बॉटल आपका है. That means कल आप आए थे, कल किसी और को भेजा था ना तुमने बैग लेने के लिए. हाँ, ऐसे सेम बॉटल था. एक दो जनों के पास और था. अच्छा. कल मैं आया था फिर सुबह बैठ कर चला गया. ओके. वही सेम लिंक है सार्थक CVA का. कॉर्पोरेट वैल्यूएशन का सेम लिंक है. हाँ. But don't share it with others. Others need to come. Now, while considering DCF, you know DCF stands for, yeah? Very good, discounted cash flow. So discounted cash flow, if you want to implement on a firm, then you need to follow the following steps. First is, you need to analyze the historical performance. Why? From historical performance, you can come to know that, okay, if this year there is a sales of this much and next year there is a revenue of this much, then what is the difference between that revenue? Has it grown? Has it come down? And after that, say for example, for 5 years, you are noting down the change. Now that change, you can note it down in percentage basis. Now you take an average percentage, that what is the average growth rate year on year basis? Has it declined or has it increased? If it has increased, then you will take that average growth rate and you can go ahead with your analysis, right? That you can forecast for the next 3 periods or next 5 periods according to the situation. Next is another important aspect is estimating the cost of capital. Correct. Now, you know that what are the hurdles of cost of computing cost of capital, because this is a part of financial management. So can you guys tell me that what is the particular hurdle in estimating the cost of capital? Yes, Sarthak, what are the challenges in computing cost of capital? I think this was taught by Richa ma'am or Swati Dhawan ma'am, if I am not wrong. See, one of the most important challenges in computing cost of capital is that there are many sources of capital, correct? And nowadays, if you look at the latest sources of capital, one of them is venture capital as well. Now, in case of a venture capital, the cost is almost negligible. There is no cost, because if somebody provides you seed finance, only the documentation cost is there. Else, there is no flotation cost, there is no cost of publication of prospectus, or there is no as such of a huge amount of legal fees you need to pay out to the particular parties, right? But in case of equity or in case of debt, And every time you try to issue a new kind of an equity, then you have to bear some legal cost. And second, the most important thing, you need to also pay certain other fees like brokerage, like flotation cost. You need to appoint a merchant banker as well, right? So these are various kind of, you can say, costs which are related to the cost of capital. Another very important thing is that in case of debt, okay, now debt is used as a leverage facility, right? Why? Because it has some tax concessions. Because whenever we deduct interest, it doesn't takes into account. But again, financial management tells us that one is a pre-tax cost, pre-tax interest cost, and another is a post-tax cost. So what assumption we will take in order to compute that cost of capital, that is also equally important, right? So that's why estimating the cost of capital, and again, there are various approaches, right? One is an equity approach, another is a debt approach, another source of financing is retained earnings. Okay, so in retained earnings, there is also another approach. Next, if you issue preference shares, there is again another approach. And overall, it is known as WACC, that is weighted average cost of capital, if you are using multiple sources of capital, right? So, and last but not the least, there is another approach called CAPM approach also. That is the estimated return approach, right? Where we consider that RF plus beta M into RM minus RF. I hope all of you know this formula, right? CAPM model. So this is another particular model through which we compute the cost of capital. So the question or the dilemma lies that which method is the most beneficial method? Is it the WACC method or is it the CAPM method? Now my answer will be, my take on this particular point will be that, see, it depends on the situation, that what kind of information is available to you, right? If you have market related information, then definitely CAPM model will help you in a far more better position. But again, nowadays CAPM model also fails. Why? Because now there are certain other models also, like that is Pharma and French model, 3-factor model. That is another model. And now Pharma and French both have now developed that 3-factor model into 5-factor model also, right? And I have a paper which has even surpassed Pharma and French 5-factor model also. Now they have included one more variable, that is the 6th variable in that particular equation. So the thing is that, see, these things are not in the book. Okay, 3-factor, 5-factor, or the 6-factor. But if you go to good B schools, then definitely they teach these things. So I will recommend all of you that you search this Pharma and French today. Please search this paper. And how to search? You know how to download papers? Yes, sir. Google Scholar. In Google Scholar, please search this Pharma and French 3-factor and 5-factor model and see that how they have computed. It is just an addition to the CAPM model, because CAPM only takes what? Market risk into account, right? But it also takes size effect also. Okay. There are many things it takes into account. Another third thing is forecasting performance. Now, how you forecast performance? Through growth rate. That's the only thing through which you forecast performance. ऐसे ही तो करते हो ना? कोई एक base लेते हो. I hope you have done horizontal and vertical analysis. ये हो. Income statement, balance sheet का क्या है? बोलो. अरे हाँ, 3 to 5 years क्या? मैं यही तो पूछ रहा हूँ. वर्टिकल में क्या? सीधे होता है ना? कॉलमनर होता है. क्या होता है? याद नहीं. See, the thing is, whenever you see, you know that as per IAS, Indian Accounting Standards, all income statements and balance sheet should be prepared in a vertical format, right? तो उस vertical format में हम base लेते हैं. क्या base लेते हैं? So for example, income statement में we take sales as the base, right? And in case of balance sheet, we take total assets as the base. एंड उस सेल्स के ऊपर हम देखते हैं परसेंटेज कैलकुलेट करते हैं कि से फॉर एग्जांपल इफ दिस ईयर say your operating expenditure is say 20,000 and your sales figure is 1 lakh for example, then that means your operating expenditure is what, 20% of sales. And through this method only you divide each an item by the sales figure so that you get a definite percentage, that what percentage of sales is your cost. Now, what is the benefit of that? Similarly, think that if you have done for the first year, you are doing it for the second year also, third year also, and fourth year also, using different sale figures of that particular respective year. Now, once you have got those percentage, you can calculate the average percentage, that this is the minimum average operating expenditure which I need to incur in a particular year, and you can do the projection. Yes. Now, how will you do the projection? Now, see, 5 year sales you have got. Now, you will do horizontal analysis. In horizontal, what you will do? You will see the change in sales in percentage. And once you get that percentage, you will again do an average value and see that what is the average growth rate. Or you can find out the compounded annual growth rate. Once you do that, then you will apply that compounded annual growth rate on the last figure. That means the last year, that is the current year's figure, so that you can do the projection. So once you have projected, now you have got the other percentages also, that operating expenditure will be this much percentage of the revenue. And that way your projected income statement for that particular period will come up. Same for the other years also, same for balance sheet also. In case of balance sheet, the only change will be instead of sales, we'll be taking total assets. Instead of sales, we will take total assets as the base. Correct? Because most of the time, if you see financial ratios, we always try to compare the turnover through assets only. That is sales divided by total assets. Correct? Yes. Similarly, sales divided by fixed asset, EBIT divided by fixed asset. Why? Because asset is something what you are investing in the business and you are trying to get a return out of it. Right? So that's why we take only two very basic bases. One is sales and another is total assets. So always remember these questions. Okay. Next is determining the continuing value. Now, what is this continuing value all about? It is known as the terminal value. That means if we know that as per the principles or the conventions, accounting conventions, any company has an indefinite life, right? But we don't know that whether the company will get liquidated in between or not. So for that, we try to project that if the lifetime tends to infinity, then what will be the value of the firm? Correct? In that case, kya hoga? It will be just like an infinite GP series, because every year it will keep on adding. Right? And last but not the least, we need to calculate the firm value and interpret the results. Now, yesterday I have given you some reports. Have you gone through that? Why? Now the question is why? See, these are the papers I'm telling you, and particularly this paper. This paper will give you a very good package. I'm repeating it again and again. Just like security analysis and portfolio management, what you have did in the last semester. This semester also, this particular thing has so much demand in the industry. I'm telling you. Please be serious. And this is the only task you need to do. Whatever I have sent you yesterday, that task is only to be done by you. Only the CA or someone else will put the signature. Auditor will put the signature. If you have seen the documents, I don't know whether you have seen it or not, but those are legal documents and that format you need to follow, because my upcoming assignments will be like that only, that you need to prepare a report. So how to present that report, what are the assumptions you have taken, that's the layout. That is what I wanted everyone to study. Just see the flow of that particular report, that how they have presented the charts. There are various reports I have sent. One is a cost of capital report also, that how they have presented the cost of capital of different industries. Just look at it. Anyways, let us start now the main discussions. First is analyzing the historical performance. Now, when we talk about the historical performance, there are a few KPIs we need to check out. What are those KPIs? One is operating invested capital. Now, operating invested capital, how do you compute that? Another is no plat or no pat. What is the full form of no plat? No plat to definition. No, I am saying about no plat. PLAT. Less adjusted tax. Okay. Next is tax factor. Okay, what do you mean by deferred tax liability? And what is the difference of deferred tax liability with provision? Provision for income tax. What is the difference between these two?
So deferred tax liability is a tax that we had to pay in the past, but we haven't paid. So it's a liability for us in the future. And provision is that we are creating a provision for tax now for the future.
So both are liabilities, but how they are different from each other?
So deferred tax is the tax that we haven't paid, but
so that is accrued or outstanding in nature, right? But provision is something which we are keeping aside for a future liability.
Kind of savings we can say.
Okay. Good. Next is net investment and ROC, and the most important term over here is FCF, free cash flow. So your life will be based on this particular variable from now onwards. Okay, one is on profit and another is on FCF. If you can compute this FCF properly, then most of your problems will go away in valuation. And next is financing flow. So we will discuss it one by one. So first note down small information in your notebook, and then we will start. या तो इसका screenshot ले लो, जो भी करना है, whatever you feel like is good, just do it. And mind you, this is a very small illustration. Next day, you need to download some balance sheets, at least for 3 to 5 years, and then do it yourself. Money Control, use moneycontrol.com to download this information in a spreadsheet. Has others also joined the company or something?
Yes, sir. Abhinav, Shivek and Arush have joined the company, and the Panshu is not.
Okay.
He stayed in Barmala. So.
Where?
Barmala.
Okay. So that means this month you two will be also gone, because Axis and both these companies will come. So best of luck. Please note this profit and loss account and balance sheet. राइटिंग मतलब शॉर्ट, ओके, बहुत लंबा चौड़ा लिखने की कोई जरूरत नहीं है. जैसे नॉन ऑपरेटिंग इनकम को NOI आप लिख सकते हो, यू कैन राइट इट एज NOI. देन कॉस्ट ऑफ गुड्स सोल्ड यू कैन राइट इट एज COGS. Done. Done, sir. Now, the first item which we need to compute is operating invested capital, right? Now, how operating invested capital is computed? The formula is very simple. Total assets in the balance sheet minus net operating fixed assets. Sorry, non-operating fixed assets less excess cash and marketable securities. Now, non-operating fixed assets can also be termed as non-moving fixed assets. Which are not in operation. Say, for example, a piece of land is not at all used in the production purpose. But yes, in case of a building, that is also fixed in nature, but that is operational. Right. So you need to be very careful while selecting the items which are included in operating invested capital. Correct. If it is an agricultural business, then this fixed land would have been an operating fixed asset. Okay. So you need to be very, very careful while dealing with these items. Okay. Next is less excess cash and marketable securities. Now, how to compute that excess cash and marketable securities? You know that obviously cash and marketable securities are a part of current assets, right? But how will you compute excess cash and marketable securities? Any ideas? Because you need to think, I will be not there with you in the corporate house to guide you out. Yes, Sarthak, how will you compute excess cash and marketable securities?
In cash, that the cash which is in our account, which is not being used at the moment.
But do you think that cash and marketable securities are short-term money market instruments in which the company invests, right? I hope all of you will agree on that. Now, this becomes a part of working capital. Yes or no?
Yes, sir.
And as per definition, gross working capital, GWC, is equals to what? Sum of all current assets. That's it. Yes or no? Please do not sit idly. Now, if you have not read financial management properly, then it is not my fault. Because see, these concepts has to be on tips. One is gross concept, and these are questions which will be asked in a normal interview. I'm telling you. Now, what is the net concept of working capital? It is CA minus CL, current assets minus current liabilities. I hope everybody knows that. Now, there is another element which is known as super quick ratio. Now, what is that super quick ratio? You bifurcate that gross working capital components into two parts. One is super liquid part, another is convertible part. So, for example, AR, AP, this needs some considerable or inventory. It needs a particular cycle time to convert into cash. Are you understanding what I'm saying?
Yes, sir.
I hope CCC, you know that, cash conversion cycle. Have you read it? Operating cycle, cash conversion cycle. No clue.
The time taken to convert
Exactly.
asset into cash.
Yes, that is what I am asking. Operating cycle means it will also take the particular time to repay your creditors as well, short-term creditors as well. But in cash conversion cycle, it will only take into account that how much time it will take to convert your receivables into cash. Say, for example, inventory, the stock which is piled up in inventory, how much time? And that's why we compute the turnover ratios, inventory turnover ratio, debtors turnover ratio. I hope you remember these things, right? So from that perspective, try to think that one portion which is stuck up, that is the debtors and the inventory part. One portion which is liquid, the amount of money which is in your bank. And since I have told you, marketable securities are those securities which has a short-term liquidity period. So you can easily get the cash from that. Now, what you do is you take only that portion, cash and marketable securities, and deduct the current liabilities. So whatever left after paying out your obligations is the excess. This is how we calculate excess cash and marketable securities. So if I try to write a formula on this, then I can say that excess cash and marketable securities is equal to what? Cash and marketable securities less current liabilities. Correct? So now the data which you have, from that data, calculate the OIC now. operating invested capital. Do it. And mind you, one more thing. In the original balance sheet, you need to go back to the notes as well, notes section as well, to find out that what is the breakup of that current assets. Okay, in this balance sheet, you might not find it. But in the original one,
we have to check out all the fixed assets.
Exactly. There you need to check out the fixed assets also. Right, there you need to check out that what is the component of the current assets. Okay. From there only, you have to take only the cash and marketable securities and deduct it from the current liabilities and see that what is the particular figure which is coming. Now, if you look into the balance sheet, what do we have? We have, say, for the first year, we have a total assets of 200 million, right? So from this 200 million, less will be, say, there is fixed assets of 150 million, correct? इतना ही तो है ना? And there is no investment as well. So investment is nil. Okay. Assuming that if they are short-term investment, because investments can be what? Long-term also and short-term also. So we don't know that whether this investment has been done on a longer period, for a longer period, and for a shorter period. But if you look at the amounts closely, then you will see that in the next 2 years, the investment amounts are quite low as compared to the fixed assets and the net current assets. Can you see that figure? So from that, again, we can interpret that the amount of investment, since it is small, so it might be, I'm not saying that it can be, it might be that we are only investing in marketable securities because the amount is low. Right. Next, so please calculate, see what is the result. And again, here it is known as net current assets. What do you mean by net current assets? Gross and net. These are two very vital concepts. Yes. Gupta ji, what is the interpretation? Net current asset. Matlab kya hai? What do you mean by it? Net current asset means net working capital only. Because liability, see side by side also, see the upper portion also. Na? There is no current liabilities there. That means what? It is net current assets means current assets minus current liabilities. Okay. So these are certain observations you need to read out from the balance sheet. If the meeting ends, click the same meeting once again. Okay, same link once again. So please give me the answers for the 3 years.
Then in this, we should assume that the fixed assets shown in the balance sheet are non-operating.
Yeah, you may assume, but whatever assumption you give, you must mention it in your note. And same happens when you do the valuation. That's why I deliberately gave you those reports to study. तो वहां पे देखना किसको एड्रेस कर रहे हो आप, टू द बोर्ड ऑफ डायरेक्टर्स, कौन से कंपनी, उसका एड्रेस, देन पहला लाइन में that this is a valuation report in respect to this and this, what is the technique I have used. So in your case you'll be saying that I have used the enterprise DCF model to evaluate a particular company or a group of companies. Okay, and this is the work you will do in EY and Deloitte and other big four firms. Because in finance, calculation is not hard. The only thing what you have to remember in finance is the concepts. Okay, if your concept is clear, and concept will be only clear, सॉफ्ट कॉपी पढ़ने से नहीं होगा. सिर्फ सॉफ्ट कॉपी पढ़ने से अगर हो जाता तो बात ही अलग था. You have to make some notes in your pen and paper and see the relationship of each and every items. अभी दिखाऊंगा, आगे भी जब स्लाइड आएगा तो आप देखना ये जो ROIC बोल के टर्म है, रिटर्न ऑन इन्वेस्टेड कैपिटल, तो उसका रिलेशनशिप कितना क्रिटिकल है, हर एक एलिमेंट के साथ वो लिंक है. So are we good with this? Can we move on to the next topic? Next topic is no PAT or no PLAT. Okay. So on the right hand side, there is a format. Please note it down. Now, while noting down this format, give an example in each case, except profit before tax. I know what is profit before tax, but give an example of interest expense, give an example of interest income, give an example of non-operating income. बोलिए. Interest expense means on FD. On loan. Okay. Income will be from the FD or any investment in bonds if you have done. Okay. Non-operating income.
Rent received from a building land.
Okay. And what else?
Any investment in marketable securities?
No, non-operating income, marketable securities, that will come under interest income. Non-operating income. Sale of fixed asset, profit on sale of fixed asset, can that be considered as a non-operating income? Right? Sale of patent. Okay, I'm giving different examples which you will not find in book. Now, what is tax shield? Okay, how it is computed? Then what is tax on interest income? That is what? That is that. क्या है? अरे मैं तो कंफ्यूज करने के लिए बैठा हूँ. ठीक ही तो बोल रहे थे, गलत क्या बोल रहे थे? देखो Look at this example. I think it will clear you up. Revenue minus COGS, you know that it is GPM, gross profit margin, less OPEX, operating expenditure, will give you EBIT or net profit margin, net operating income. यही तो होता है EBIT का मतलब, ऑपरेटिंग इनकम ही तो होता है. इसे हम डिफरेंट नेम से जानते हैं, NPM भी बोलते हैं, इसे नेट प्रॉफिट मार्जिन भी बोलते हैं. तो सी, in company A, the NPM is coming to 35,000 and company B also 35,000. Now, company A doesn't have debt in its capital structure, but obviously company B has debt in its capital structure. So that's why it is incurring an interest expense of 4,000. Now, this is what? PBT, that is profit before tax and or earning before tax. So for A, it is 35. But for B, it is 31. Now, less taxes. Now, these taxes, I don't know whether it is an effective tax rate or a marginal tax rate or an estimated tax rate. God knows. Now, do you know what is the difference between these things? Your terminology when you use effective tax rate, marginal tax rate. Okay. No issues. Effective tax rate means आप एक assumption लेते हो, assumption लेके काम करते हो. But when you talk about marginal tax rate, it is as per law, as per various guidelines. For example, in case of Income Tax Act 1961, 30% is to be charged as an income tax from domestic companies and 40% from foreign companies. Correct? So, while reading the problem, you should also understand that what is the nature of the company, nature of the firm. Is it a domestic company or is it a foreign company? If it starts with the word MNC, that means it is a foreign company. As simple as that. And hence, you need to charge how much? 40%. And sometimes this tax rate will not be given in the problem. One more thing. So, on a flat rate, here in this problem, 21% has been charged from both these companies. Correct? Now, 21% of 35,000 is 7,350. And for company B, it is 6,510. Okay. Now, after deducting the taxes, which we know that PAT, which you call it as PAT, profit after tax. So profit after tax is 27,650 and 24,490. Now it is telling that how much tax actually company B has shaved. Okay. So now if you look into this formula, that this 4,000, out of this 4,000, whatever interest expense it has incurred, 4,000 off the tax rate. 4,000 off the tax rate, that is $840 it has saved. Compute 21% of 4,000, it will come to 840. Clear? So again, coming back to our NOPAT discussion. So here, this is how you need to calculate the tax shield on interest expense. Similarly, tax on interest income. Say for example, if you are putting your money in FD or something, then 10% TDS is deducted, or according to the nature of the FD, the TDS amount will be deducted. So that will be again tax on interest income, correct? Next is tax on...
Tax shield is on interest expense.
हाँ.
Not on interest expense. कई जैसे उसमें in mutual fund उसमें होता है कि tax free होता है, that is.
वो ELSS वाला, वो individual, from an individual point of view, you are talking about that. So for example, if I am investing say 1 lakh, 1.5 lakh